Welcome to the Del Walmsley Radio Show. Del challenges the status quo, questions everything, and empowers you to return to your core beliefs to make your life better. If you're ready to hear the truth and get your roadmap to the lifestyle you really want, the next hour will change your life. And now, your host, self-made millionaire, national award-winning investor of the year, CEO and founder of Lifestyles Unlimited, Del Walmsley.
Welcome to the Del Walmsley Radio Show, where the hype ends and the help begins. I'm your host, Del Walmsley, and as always, we're working on your financial freedom. Today, my friends, on Tell Del Tuesday, I've got an interesting person to bring on. Mike has been around for a long time, been doing real estate since 1985, and that's almost as long as I've been doing it, and that's an interesting concept. Mike is now one of our Lifestyles members and one of our Lifestyles multifamily mentors. And so he's very deeply involved in what we're doing. And we're happy to have him on here today to share his experience and to bring to light some of the stuff that he's done. So welcome to the show, Mr. Mike Spots. Mike, welcome to the show.
Hey, Del. Good morning. Thanks for having me.
Mike, just let everybody know you're out of Dallas, Texas, and you've got about 500 units that you own and operate right now. So let's talk about way back. You've been doing real estate since I think I read somewhere 1985, way before you ever joined Lifestyles, huh?
Yeah, I've been in real estate, the investment side, for quite a long time.
Tell us about your history.
Yeah, got into it right out of college. I graduated college in 87. And first thing I did was really buy a duplex, lived in one side, rented out the other, and wow, instantly I was hooked. They were paying my mortgage. So then a light went on, and I just, throughout my career, I just started buying up more properties. So
what kind of properties did you specialize in the beginning?
Mainly single family. You know, like I said, I bought the duplex first off, and then around where I lived, I'd buy up properties, distressed single families, nothing, no retail or anything like that, just really residential and focused on that. And then just, it just continued to cash flow. And then back in, I guess it's been about 15 years now. When I was 45, I retired.
I was just reading some dates on your resume here, and you actually started back in 87, so you actually started the same year I started. Great. So you started back when there was a crash, when the real estate was super cheap.
It was, yeah, the RTC. Remember the RTC?
Oh, yep. Definitely. Definitely remember it. So what I want to ask then is, what was your education in your job besides doing real estate?
Yeah, so I was in the semiconductor industry. So it was really the high-tech industry, and I was in sales. So I did a lot of travel. And really, for the real estate side, it was just really passive income. And I just did it on the side and really didn't pay much attention to it, to be honest. And just went down my W-2 career for years and years and years. And then back in 2008, when everything started to take a little bit of a hiccup, my company, I worked for a Japanese semiconductor company, and they were offering a lot of packages. And luckily, I had a very nice stream of income from my rental properties, and I took it. And I was done. I was retired.
What year was that?
Back in 2008.
2008, 2008?
2008, yeah. Yeah,
that was another crash. So
it was a big crash.
You get involved buying then? That's the year that I actually tripled my net worth and became a multi-millionaire. That was an incredible year. 2008, 9, and 10 just was unbelievable for me. What did you do during those years?
Yeah, we continued to buy. It was incredible, and it was kind of really interesting because the quality of the assets that were out there that we were buying up, I mean, they were move-in ready. They weren't distressed. It was just people had to leave because of the financial troubles. These were great assets. We were scooping them up. Matter of fact, we bought one that I'm about to put on the market. We paid $150,000 for it back then, and I know that's a lot. It sounds like a lot for some of them that we're buying, but I'm about to put it on the market for about $450,000.
Wow!
So an incredible amount. This one asset alone, we've had it for about 10, 11 years. I'll probably make about 900% return. So,
and I'm assuming that's a single family, right?
It's a single family, yeah. So it's not a big multifamily asset. But
that's still a good chunk of change. Good chunk of change there.
Just beautiful. Yeah. Great cash flow, too. You figure we were cash flowing anywhere from, early on we were cash flowing $600 a month. And then later on we were cash flowing around $1,000 a month.
It's great.
Yeah.
So let's take this next step here. You're out there, you're doing it, it's working. Why do you look into Lifestyles Unlimited? And by the way, that was in 2015 you joined. What made you decide that you wanted to get into a program like this since you were such a loner before that?
That's a good way to put it. I was kind of did this on my own. And like I said, I was in sales and had the benefit. And honestly, I listened to your station and you for a long time. And I always loved the message, best product, best price. And my motto was the same thing. I always stuck to that. I put great product out there. Like if you go in, you fix it up. Everything is perfect. And, man, I'd have people in for 5 years and never would get a phone call. And that's the cool thing. And I thought I knew this. I had it down. I was kind of doing everything. I'm paying cash for them. I'm paying them all off. And then a buddy of mine came and said, hey, I'm going to this weekend 2-day thing called Lifestyles. And I went, oh, man, I know all about that. And I went to the 2-day, and David Fisher went the presentation. And David Fisher basically said, you're an idiot. You're doing it wrong. I started doing the numbers, and I went, holy crap. For the last 25 years, I've been doing it all wrong. And that day I signed up, and I've been kicking myself that I didn't do it years earlier. Even though I was successful and I loved it, I didn't know what I was doing. I didn't know what I was doing wrong until I joined up. And
so,
it was amazing.
The answer to that is you're probably doing a lot of things right. That's the problem. Real estate is so forgiving. You can do a lot of things right and then miss a few little tricks.
Yeah.
And I'm assuming the trick that David was slapping you around with was leverage.
100%. Yes, all about leverage, because here we are doing the pay it off and cash flow out of it. But once you start putting the numbers of leverage on it, like you said, you triple your net worth. I could have tripled, quadrupled pretty quick.
Absolutely. I remember the days when I first figured that out. In fact, you don't figure it out. Somebody has to stick it in your face and shove it down your throat. Because if you're the kind of guy that gets ahead on his own, you're pretty conservative, you're strong-minded, you think you know it all, and you don't want debt. And you think someday I'll get all this stuff paid off and I'll be, man, look at the cash flow I have then.
Yeah, it was nice cash flow back then. There's no doubt about it. But you do wake up and then you realize, and what was brought to my attention, obviously, in that 2-day was, wow, there is so much more out there. You start getting into the multifamily stuff, and now we're talking.
Had you done multifamily before you went to the 2-day?
No, I never did. I've always had the interest, and I'll tell you, Del, I am so thankful. I have put offers in on multifamily properties before Lifestyles, and I am so thankful that when I got into Lifestyles that I did not get them. Because if I would have been awarded those assets, I would have failed. Because they are nothing like single family, and it's really a business.
I would guess that you're reminiscing over the next growth process that beginner investors learn, is that when you move from single family to multifamily, you can't evaluate the expenses the same way. It doesn't work. And so you get a single family real estate agent, and they bring you a small 5-plex or 10-plex, and they go, look, the taxes are this, and the insurance is this, and the water and electric is this. That's your expenses. That isn't your expenses. You understand? But that's what they're going to try to tell you they are, and they come up with a fake NOI and a fake, value and the whole bit. And until you know that, you're right. You would fail in those scenarios like that. Luckily, I went through 4-plexes first, so I ran into something that really wasn't a multifamily, but started to have some of those multifamily expenses hidden inside. Then I went up to a 10-plex, so it was like even what I didn't know couldn't hurt me that bad because it was only a few more units. But I totally understand that point. The evaluation process is completely different. So were those the aha moments in the 2-day for you, if you can remember back that far?
Huge. Absolutely. But that's really when the light came on.
All right, we're going to take a break right there then. I'm sorry. We got to cut you off. They're taking us out. We'll be right back with Del Walmsley Radio Show.
back. Now here's some more unconventional wisdom to set you free from the man on a mission to retire America, one person at a time, Del Walmsley.
Welcome back to the Del Walmsley Radio Show. With me here today is one of our multifamily mentors out of the Dallas market, Mike Spots. And Mike's been in the business since 1978, we just found out. Went back a little further, got started in single families. And he's been doing multifamily since 2015 here at Lifestyles Unlimited. He has been so successful that we've asked him to be a mentor for us, and he has been for a while. So, Mike, as we get back here, when you came out of the 2-day conversation with yourself or whoever it was you had the conversation with, how did you decide whether to go with IRO, multifamily, or syndications?
It was pretty easy for me. With my career, I managed a lot of people, and I managed big capital assets, so I was real comfortable with that. So really, for me, it was moving directly into the syndication. I didn't mind the IRO stuff. I could do that as well, but with this group that we have, it allows me to give back even more and help the people who have W-2 jobs and increase their wealth. So it was pretty simple for me going into the syndication side. And, hey, the training, the team, and everything that's needed was right there. Like I said, I already had a lot of education. I was already a broker as well. So I went out and got my broker's license. I've been in this business for a long time. So I felt the next thing for me was, let's go buy some of these bigger assets. Let's syndicate. Let's go get that education done and continue down that path. And that's exactly what I did.
And you did it very well. People were very happy with the results that they got with you. So let's move on to your theories as you built them. When you first came out of the blocks, what were you looking for as far as a deal?
So my box was somewhere in the range of 80s or newer, because I struggle. I mean, I've been in this a long time. I don't like older assets for me just because of the stat blocks, you know, the plumbing and the older stuff like that. So I'm looking for something a little bit newer. Also looking for something 100 units or bigger because of economies of scale. Because what I'm trying to do is I'm trying to grow my business. So if you're getting something a little bit smaller, you're going to have to spend a lot of time with it because the economies do not cater to having a manager and a maintenance guy. So I was looking for 100 units or more. That way I could have a manager and a maintenance guy. And that was actually the first one I found. It was in a very good location. It was just under 100 units, and I could afford having a full-time staff.
Now, let me ask you this as a mentor, because I did that for a few years myself. Quite a few years.
Yeah, still doing it, Del.
And the question I have for you is, you say 100 units. Are you steadfast on that, or can you see a number smaller than 100 units you can still have a maintenance man and a manager?
Yeah, you definitely can. That's kind of just a rule of thumb. I think depending on the asset, depending on the age, depending on really how much CapEx you're going to do as well, that all is a contributing factor. I think maybe 65 units is probably that teetering.
You want to hear something funny? My first property that I went with a full-time manager and maintenance man was 64 units. My second property, that size, was 68 units. My third property was 88 units. So I've got this funky knowledge in my brain. You got to have 60 units to have a maintenance man and a manager. That's why I asked the question if you were steadfast to the 100.
Yeah, that's kind of just an industry rule of thumb. But I've had a 74 unit, and we had full-time, and same thing. It worked out great. You know, it's just not across the board, but it's just that rule of thumb. When I'm mentoring people, I kind of give them those guidelines. If it's a little bit older asset, you know, maybe you tweak it a little bit to the specific asset itself.
So let's take that one step further, Mike. Since you're a mentor and I'm a mentor, we can give out a little bit of this inside information. Industry standards for staffing is basically one inside person, which would be a manager, assistant manager, leasing agent, one inside person per 100 units, and one outside person, which would be a maintenance man and or porter or whatever, one maintenance man per 100 units. And as you go up, if you go to 200 units, you need two of each of those. If you go to 150 units, you need one full-time, one part-time guy. Is that pretty much the way you see it in the industry out there, about one per 100 and another one?
Yeah, it's just right around that across the board. Even with my assets, I have my own management company, and that's kind of how I run mine. All mine are kind of 80s vintage assets, from anywhere from that 94 unit to 256 unit.
Well, I got a 256 unit also, Mike. Same number. I've got 2.5 inside, and I've got 2 outside and a maid. So that's 2.5 outside. So it's almost exactly, which is weird about it.
You're dead nuts. That's exactly what I have. And luckily, because I have other assets close, I share that half. So I don't have to bring in a part-time person. They're still on staff full-time. We just share them with the properties. Yeah,
we do too.
Yep, works out perfect.
But otherwise, you just pick up a part-time person to fill those zones. Yep. That's great stuff. So, so you did that, and the first one was a value play or a yield play. How did you see that opportunity?
Yeah, it was. The first one was a hybrid. I couldn't specifically put it in either category. The guy I bought it from, he came in and did a lot of work on the exteriors, did a couple units on the inside, and proved the concept and proved the rents. So we took it from him, and we had our CapEx. We were still doing some exterior work, but our main focus was to do about 75% of the interiors. And we started pushing the interiors. And then one of our things, too, is if we push granite, that's kind of one of those hard surfaces that helps us because it's a hard surface. Yes, it's expensive, but we can probably get $100 more a unit for rents, and then our turns are quicker. But when we started doing the granite, which cost us about $2,000 per unit, we started pushing rents, and then we started pushing rents without the granite, and we were still getting the rents. So at that time, that was probably about 4 years ago, rents were going up significantly. So we stopped it and still continued the rest of the interiors.
You're tearing stories out of me, Mike. You're tearing stories out of me. I had this property I bought, I thought it had been totally remodeled by this guy, and it was getting lower rents than what I was getting across the street, and mine was a piece of garbage, and his was really, really nice. So I bought it and decided to put in ceramic tile, crown molding, big 6-inch baseboards, two-tone paints. I mean, I was really fixing this thing up and spiffing it out, right? And I was getting a $100 a month increase on every rent. One day, I was doing it because it was fun for me. I again, retired like you were, so I'm doing the work with my maintenance guys, and I'm feeling it. Hey, man, I'm doing a great, all that stuff. And so one day my manager calls and said, I got tired of it after a while, and I stopped being over there working with him. My manager calls and said, look, we got a problem. The maintenance guys can't keep up with the maintenance and keep remodeling these units. And I didn't bring somebody in to do it. I mean, my guys were doing it on the side. She goes, that's the bad news. I can't keep up, and I can't keep raising rents on those units. So when we come back from break, Mike, I'll tell you the rest of the story because it's incredibly funny. We'll be right back with Mike Spots in the Del Walmsley Radio Show.
Welcome back. Now here's some more unconventional wisdom to set you free from the man on a mission to retire America, one person at a time, Del Walmsley.
Welcome back to the Del Walmsley Radio Show. With me here today on Tell Del Tuesday is Mike Spots. He's one of our mentors up in Dallas, multifamily mentors up in Dallas. He's also a syndicator in his own right, has over 500 units that he's operating right now, has done other deals but sold them off. So as we're going to break, I was telling Mike a story that he had told me a story about raising the rents and finding out that it was a lot easier to raise the rents than what he thought. I was telling him a story back that did the same thing, and I started over-rehabbing these things, Mike, and one day the manager calls me and says, I got good news and bad news. I said, what's the bad news? She said, we can't keep up with the rehab, so I don't have any more units to lease at the higher rates. I said, so what's the good news? She goes, I lease the old units at the higher rate. So the bottom line is my ego was crushed because I thought I was doing this incredible rehab and remodel and everything else, and I realized I just was an idiot and I wasn't doing market surveys very well. And the point I want to make by all that, telling two stories exactly the same, Mike, is that you're a mentor. And as a mentor, you've accumulated these stories on all these multifamily properties you've done.
Yeah.
And you have that experience. And you've also been a member for a long time, so you've gone from location to location to location on road trips and seen other people's projects, and you've been able to absorb all of their information. What does it make you feel like to be able to stick your finger in somebody else's project and go, look, man, look, I know you don't want to hear this because no male wants to hear another male tell him how to do something, but that's wrong. You can do that a lot better.
You and I both know that, yes. And it's a pride thing, but it's really interesting because I have the luxury of seeing hundreds and hundreds and thousands of units, and we're underwriting hundreds of projects. And it's very humbling when somebody is coming to you and you're telling them, and then what you're telling them comes to fruition and it works, and they're just going, wow, I get it now. Because a lot of people that are in our group they don't have a real estate background. They've never done this before. And they're trying to quit their W-2 jobs. They're starting syndication, and they're listening. They're going through our training. And it's kind of like that, like you said, that aha moment. I see that aha moment so often. It's incredible. Yes, at the beginning, their pride is bucking the system, but when they start seeing it working, it's amazing. The light comes on, and they're just humbled. So.
Yeah, mentoring's a completely selfless thing on one side of the coin, but on the other side, it's very fulfilling. I mean, there's some fulfillment you don't even get out of operating your own properties. I mean, things like you go out on a road trip with someone or go out to do a tour with someone, and you look over their financials, and I gave this one family a set of financials on a 27 unit, and they got up and testified a year later at the case study that I was only $100 off on the total net operating income for the year. I had another guy that went out to, him, Terry Matheny. Terry Matheny went out to Austin, bought his first property. I walked it with him. We came up with a rehab budget, and I just the walkthrough alone, I quoted him a number that ended up only being $4,000 off, and I think that he had done some spec changes that might have changed that.
Yep.
But I mean, you do, like you just said, if you look at 20 of these a month, and you do that for 4 or 5 years, I mean, it's almost like they're all sheetrock, carpet, and paint. They're boxes.
It is. Yep.
And they're boxes with rent per square foot attached to them. And you figure out what the box costs, and you figure out what the rent per square foot is, and you can figure out what the profit is, right?
Yep. It's absolutely amazing. And just like you said, you did the case study. We just had a case study last week of the exact same thing. 2 years ago, this new couple came in. They were all gung-ho and anxious, and they syndicated their first deal up here in North Texas. We ran through the numbers when they first bought it, and everything worked as planned, and they've already turned it. So they turned it within, 2 years, and they made like 120% profit on it, and the numbers, and we brought them up to case study, and they're beaming ear to ear. It's just, that is so fulfilling for me.
Yeah, it's very satisfying for me, so I appreciate if you have that same satisfaction.
Yep.
Which brings me back to a little meeting. I don't know if you remember this meeting. We're sitting around a kitchen table at my house.
I do.
And I'm trying to convince you to be a mentor, and you're like, I don't know. I don't know.
Sounds like a job.
Yeah. I don't know what the argument was so much. It was a job, or the fact you don't like being told what to do, or you thought you weren't going to be able to continue to build your own business, or I can't really remember exactly what it was, if it wasn't all the above, yeah. And I don't know, what got you? How did I finally convince you to go ahead and try being a mentor?
Del, you are an incredibly influential person. And it really came down to, Mike, had the experience. It's time to give back. This is our philosophy. It's time for you to do it. And I cratered.
Did you ever regret that, Mike? Have you regretted giving back?
No. It has been the most fulfilling part of my life, I have to say, because being retired, I was bored to death. Yes, I had my real estate, but this has been something so rewarding to me. And now I'm sitting here saying, Del, thank you. Thank you for allowing me to do this. And I will do it as long as I can. I absolutely love it. I love the people. I love the organization. Everything about it. It has been just so fulfilling. And watching these people learn. I mean, this is, I hate to say it because these are adults, but this is like my kids growing up. And I love it. I love watching them grow and watching them learn and getting into these assets and being able to retire out of their jobs. And really, it's so rewarding watching some of these people syndicate these deals and then give back to their partners. It's just an amazing reward.
Yeah, it really is. And I'm glad you see it that way, Mike. I promised you that it would be that way, and I'm glad you actually agree. Giving back, and people have an opportunity to meet you, non-members even have an opportunity to meet you at this up-and-coming expo. You're going to be one of the designated properties that we stop by and see, are you not?
Actually, I won't be doing one of my properties because I do have several properties in the area, but I will be on a bus. I will be hosting one of the buses.
Okay, gotcha.
That go to them.
And have you done a bus tour before?
I have. We had not an expo, but like a mini expo bus tour here in Dallas before, but I've also helped out and done them in Houston as well.
You also do road trips, right?
We do road trips every month, yeah.
So to me, I have to tell you, the most fun thing about creating this business, and really I created a business that was really a playground for the minds. And for people that had, like you say, people like you that retired and people like me that retired, you have nothing to do. Go, well, what can we do for fun? Well, Everybody we know our age has to go to work Monday through Friday, right? So we need friends.
Yep.
So we go, how do we get people to play with us? Well, if we tell them we'll teach them how to be rich, they might want to come play. And sure enough, we load up those buses and we go out, or we drive out there as groups and we look at these properties, man, and there is nothing more fun than watching people's eyes open and their jaws drop. It's just an incredible thing for people to see what can be done. And what I think is the most important is that it's done by people you wouldn't think could ever own apartment complexes.
Everyday people, and no matter what your background. I mean, we have software engineers, we have managers, we have doctors, we have lawyers. I mean, every walk of life. If you have an interest or a passion, we have the education. It is just an incredible way to do it. What a group. Then you go out and play, like you said. You go out, you walk the properties, and then we usually have a lunch afterwards, and we'll go hang out and talk about it, and then we'll talk about the financials too. And it is pretty amazing.
Yeah, coming in, I didn't ask you that question. That's one of the earlier questions normally in my interview, would be, what did you think when you first got to this group when everybody was willing to tell you their private business?
Never in my life, other than within my company. Yes, you talk about your financials, but nobody has ever talked about their personal financial statements ever with me. And that's pretty normal. But when you get in this group, you're just blown away, because now you're talking about people, your investors, people who are KPing on deals with you, and me as a lead. It's open kimono. I mean, it's full exposure. Whatever somebody wants information they want, I'm willing to give it to them, because that is the community that we have. It's across the board, and you don't get that on a normal basis. You're exactly right.
Well, we're going to take a break right now. When we come back, Mike, what I'm going to have you talk about is how that being open on the front end leads to your ability to be a syndicator on the back end. We'll be right back with Mike Spots and the Del Walmsley Radio Show.
Welcome back. Now here's some more unconventional wisdom to set you free from the man on a mission to retire America, one person at a time, Del Walmsley.
Welcome back to the Del Walmsley Radio Show. With me here today is Mike Spots out of Dallas, Texas. He's one of our multifamily mentors, been with us for a while. And we're discussing the cycle of going through being a beginner into intermediate to advanced investor and then finally into syndication. And Mike, I want you to explain how the openness in our society at this group allows for just the average person who's never started a business or syndicated a business before, with massive education from us, is able to raise capital much easier. Explain to them why or how that is and how much easier it is. I mean, I don't think people even understand or could even understand the amounts of capital that are raised from like-minded people.
Yeah, there is no doubt about it. It's an incredible community, because you think about it in a normal business. When somebody has their business, say I owned a business, say I was a window guy, I don't know. I am not going to show my books to anybody. I mean, you think about it, that's my business. So why would I show it to anybody other than, well, I may need an investor, so I may show you part of the books. Well, That's different because in our community, and it's not like that in other communities, this is our community lifestyles. And really what it comes down to is when you're opening your books, you're opening your lifestyle, your life, your financials, you're opening and exposing it to everybody in the community. And that creates so much trust with everybody, especially when you're syndicating. If you're an IRO, okay, I get that too. But the funny thing is, even the IROs in our community are fully open with their financials, whether it's their personal financials or the business financials. Now you shift to the syndicator, which you would expect to be a little bit more open, but it goes back to open kimono. They're fully open with their financials, their personal financial statement, and especially what goes on with the properties. Now, what that does is it definitely builds a trust as a syndicator and the passive investor. So, like, say, one of my last deals, the amount of capital you're able to raise in this community is pretty outstanding. The last syndication I did, I think I was able to raise $12.5 million in a day. So that's pretty significant. If you were outside this community, I've heard people struggling with $3 and $4 million. Now, obviously, we have a pretty good-sized community. I think we're around, 26,000 members now?
Actually, we're over 50 now nationwide.
Yeah, we had a great year last year. So that just blows things out so far that we can do some incredible-sized deals across the country. And we're not just doing them in Texas. We're doing them everywhere. And we're helping people nationwide.
So after you do this and you become a syndicator, you find that it's easy to raise the first time, but it gets easier with each one, does it not?
It does. I get phone calls. I probably get 10 phone calls and 20 emails a week. Hey, when are you doing your next deal? What's next? What's coming up? What's on the forefront? You know, there's just so much money available, and as you do these deals, you create a following as well. As a syndicator, the cool thing is a lot of people will follow you. I have people that have been in every one of my deals, and we have been successful because of that. So, matter of fact, one of the deals after this, I'm heading to sign on closing it. So we're selling one of the assets, and we should net out about 115% returns. So because of that ability to kind of kick back those kind of returns, that's why people are ready to deploy money with you again.
It's an amazing cycle, is it not?
It is. It's great. Great community, great cycle, great group.
So let's take it one step further. After you've done 4 or 5 of these things and you've got your system down, and pretty much by the time you've done 4 or 5 of these, you got to be making some really good bucks and build a lot of net worth. Do you think it's outrageous for me to ask you to come back? Give back?
Oh, Dell. You know what? I don't care how much money I have, the net worth. I have a team, so I have to admit it's my team. I have surrounded myself with an incredible team, so they're making me a ton of money. But I'll come back. I don't care how much my net worth is. I'll come back because I love the community.
I think that there's a statement I make out there all the time saying if you don't have enough to give some of it away, you're not really rich. Because, you know, Mike, as you help people, the beginner guys are striving, and men and women both, but they're striving to get to that point where they're comfortable first. Well, you know, let's replace my earned income. Okay, I've done that. Now let's get to where I have extra money to do the stuff we've always promised you could do and have a lifestyle. Okay, then let's go one step further and have enough money to be able to grow and, you know, rainy day fund. And okay, now I'm really set. But some people never get to that point, do they? They're always, no matter what they have, they go, then it becomes an ego thing. Well, I've got a 12-inch arm. Maybe I should have a 15-inch arm and an 18-inch and a 20-inch arm. You know, they just keep going.
They do, and what is enough? You know, the way I look at it, especially in what we do, when you can make a 7-figure income and not pay taxes, and it's really because of the community.
So you build respect within the community, and then when you go to mentor, you find it pretty easy that people know about you, that they'll listen to you?
Yeah, you know, it is, especially going through the training. Once they go through the training and they start showing up to the events and they start seeing you and seeing the people who are around you, the people that you've mentored, and how successful they are and how successful our deals are, Yeah, I mean, you start building that rapport, and then, like I said before, it kind of humbles them to where their guard goes down, and then they're listening. And even though people who have been in the real estate business before, like me, I thought I knew everything until I got into the community, and then it really humbled me, and I went, oh, I don't know everything. And that's kind of that's what my position brings.
All right, Mike, I want to thank you for coming on today. And for the rest of you out there, remember this. Mike, myself, and the rest of us, we're not working for money. It's for a wonderful lifestyle. Have a great day. We'll see you tomorrow.
The information and opinions you hear on the Del Walmsley radio show are those of the host, Del Walmsley, his guests, and his callers, and do not necessarily reflect the opinions of this station, its affiliates, its management, or advertisers. The Del Walmsley show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented on the Del Walmsley show constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.